So in this case, as this is a 5-minute point of interest, I want for price to create and eventually notice what happens. It fully broke to the downside, came back, rejected it. In this case, what we have is fully confirmed. So a very common question that I often get is, how do I enter my trades? Do I place entry orders? Do I take trades right away when price reaches into specific PDRA OT levels? Do I set limit orders and stuff like that? So right away, I will say that it's a mix of a few elements. One thing that we can cross out right away is that I don't place limit orders, and there's a reason for that. I used to do it a few years ago, but overall, why I'm really not that much into it right now is because after simply doing lots of reflection, running through my data, running through my trades, etc., looking and analyzing how could I even more increase my win rate, one of the key factors that popped up was avoiding setting entry orders. So that's exactly what I did. Now, the real reason for that, let's make ourselves some space right here. The real reason for that is, let's say when we are looking for a specific movement, price is pushing towards our magnet area, towards our main drawn liquidity, etc. Why I don't really like setting entry orders is simply because I like paying attention to actual real live market reaction, how price is reacting to certain specific levels. When what comes to entry orders, we don't have that ability. So in other words, we are kind of in a way trading with a blindfold on. Even though we can stack our confluences, even though we stack everything on our side, etc., even though it sometimes even takes away a lot of unnecessary things like emotions and stuff like that when we have to enter, to be completely honest, I think that that is more needed for traders who literally in some cases just freeze and can't enter live. When price pulls back into their point of interest and stuff like that. So again, why would we actually place a limit not really knowing how price is going to react when it reaches into this area? Either we are going to see some micro changes in price action and it just shoots to the upside, runs some walk buy side liquidity before, let's say, continuing to the downside and stuff like that. This is where a lot of traders just simply get doubted out for absolutely no reason. And in my opinion, there's just really no reason why you should make trading even more difficult for yourself. So unless your approach is actually based on limit entries, let's say where you're executing from 15-minute point of view, 1-hour point of view, in those type of cases, okay, you set your limit entry, etc. You have your backtested data, your whole trading plan, and your whole trading approach is based on entry orders. It again removes a lot of unnecessary emotions for you. If that's the case, perfect. I'm not speaking against it. Again, I'm talking from my personal perspective and how I do things. And how I do things, when price actually moves into my point of interest, I want to see price actually react to those PDRAs and to those levels. And when it starts reacting, I'm completely okay getting in with a slightly worse entry, with actually being sure that, let's say, in short situations, sellers are stepping in and we're about to see price continue moving with the main order flow, with the main direction, and so on. So let's say one of my most recent trades on the long side that I took right here on Thursday last week. The long story short, on this day, what we expected with our community was for price to bottom out with here, form a London kill zone low, then head into this 1-hour bearish fair value gap, form a near kill zone reversal, and continue lower. What you are basically looking for were longs in the first half of the day and shorts in the second half of the day. So we got exactly that. I personally focused on the long side because all shorts went outside my trading hours. It went deep into the London coast kill zone, so I simply avoided those shorts, even though they were still very valid trades and I could have taken them. But instinctively, as I'm used so much to following my kill zones, then I look at the clock and see that price is moving outside my normal trading hours. I'm just completely okay with closing the chart and stuff like that. Even though again on that day, as price was following our analysis to absolute perfection, some discretion could have been applied. Anyway, talking about this development right here, trading towards 1-hour bearish fair value gap as our direction, short-term direction regarding the upside. If you dive to the 15-minute time frame, this acted as our short-term magnet area right here. Price formed a London kill zone low, started climbing to the upside, left the bullish SMT between these structures right here, gave another market maker shift to the upside again, and from that point, what I noticed is that price is forming this, as we call, 31st lesson type of formation, strong lows pushing towards our lower time frame point of interest right here, as again, we are looking for near kill zone to form a high of the day, give a reversal and continue dropping to the downside, seating for sell side liquidity of the long one kill zone, and to drop into the weekly a bullish imbalance. So my trade happened right here, and we will talk about it when we drop to the 5-minute time frame for even more clarity. So from the 5-minute perspective, what we saw right here is price building to the upside, even if we find the same exact day here on the DXY, on the dollar index. Let's invert the chart, pressing Option and I. For Windows users, you can press Alt and I, and you will invert your chart. If you go to this exact day right here, Thursday, you can see that price here fully took out long close and low on the inverted dollar chart. So that is bullishness and that is correct in correlation. Then we saw even more of that right here. Notice that price here on DXY formed this low and a higher low than what we had right here on Euro. Price took out the sell side liquidity and formed this structure right here. So we have even more confirmations, even more correct in correlation, etc. Anyway, regarding the topic, talking strictly about entries, when we had price moving to the upside, firstly taking out this high, we didn't even pay attention to longs, but then it started building ground, started building structure and sell side liquidity, gave SMT, etc., gave another expansion to the upside in the form of a small bear trap, vague high because it stopped very close from the 1-hour garish fair value gap. So when this bear trap was forming and we were already looking for a quick in and out long scalp position, when price retraced into the OT level right here, notice that what we have from this low to this high was an OT zone. And what's more is that we had price retracing right here, running into this bullish fair value gap here on the 5-minute. So what we had was a pretty nicely stacked area to look for longs. And now notice what price does. It starts reacting to the upside right here. So now even though you could, let's say, have your entry or your right at this point right here and look for your targets to the upside, for me personally, that's not really how I enroll. I like to see more confirmations. I like to see price action actually show that I'm correct on my analysis, that what I'm seeing is just not some false delivery that I will get caught on and stuff like that. So when price started reacting to the upside, this is exactly when I drop to even lower timeframes, which for me in most cases is 2-minute time frame, and that's when I look for clear confirmations of my entry. Sometimes there's no middle time frame like 5 minutes. Sometimes from 15 minutes I jump straight to the 2-minute. That actually happens in most cases. So let's see, all that we would have is 15 minutes and 2 minutes. This whole structure would still be the exact same thing. Bullish S&T between these structures right here. Price ran, sell side liquidity formed a strong low right here, runs higher, starts forming a bear trap, then it drops right into our area of interest. Then what it does, it starts reacting. So from that point, what I would like to see is price actually start showing momentum from that side. So then price leaves this imbalance candle right here. I would be completely fine entering once price runs into this imbalance. But in most cases, what I even do is when price actually reacts and rejects that P array. So in this case, it rejects the OT zone. It rejects all the P arrays right here and it runs higher. It leaves first P array right here and gives a reaction. So when it gives that reaction and when it shows that price is actually switching into execution timeframe or the flow, price is about to keep on climbing and respecting these P arrays, then a positive candle like that closes. This is when in most cases I'm seeing a green light to take my entry, and this is how in most cases I roll. So for a 2-minute perspective, this whole structure was a bit too high. So let's say if you're trading from 5-minute point of view, this is when from 5-minute point of view, let's say you're on dropping below 5-minute time frame, I would wait for price to actually form a clear candle rejecting this whole P array area right here. If you want more confirmations like I do, this is when I most again my favorite time frame for entries, which is 2-minute time frame. That's when I wait for even more confirmations and stuff like that. So in this case, as this is a 5-minute point of interest, I want for price to create a 2-minute point of interest. So it reacts higher, leaves a clear 2-minute bullish P array. After closing with this candle here, it reaches into this bullish imbalance, rejects it. I'm completely fine with entering my position. So I think you guys can see how it's a bit more complex, obviously, but with time you see more and more and more pieces of the puzzle. And what I like to see most is when price is actually showing confirmations, showing reactions to my P arrays, confirming my direction. And if you would go and watch most of my trade breakdowns, in most cases, again, what you will see is my entries after price actually retraces and rejects a specific P array. So let's say if that day we are looking for shorts, which we did, but again, as price moved into the London close kill zone, I ended up just instinctively closing the charts. But if I haven't done that mistake, fully following my analysis for today, which we are completely on point, looking for longs in the first half of the day, looking for shorts in the second half of the day, my entry would have came right here. Once price fully took out this structure right here, giving a shift in delivery, and this is not this delivery because again, price was just messing around. For me, this is not a strong shift in delivery. We could count count it as valid, but again, the main reason I wouldn't look for such entry right here is because I always pay attention what happens in the buy side of the curve of a sell model. So as in this case, we have the sell model right here. I think all of you guys can see it, sell side of the curve right here. As in the buy side of the curve on the left, I have this very clear BPR that at first wasn't that visible, but when it gave this bullish rejection right here, second rejection, third rejection, then price was just messing around this area and eventually notice what happens. It fully broke to the downside, came back, rejected it. In this case, what we have is fully confirmed sell side of the curve right here. We have our weekly imbalance as the main magnet area right here. From this point, after the near tail zone reversal, we have this execution time frame. Some model in play, sell side of the curve bearish or the flow is sticking in. With this drop, price actually gave a strong shift in delivery, strong breakdown. Also, it completely broke below this big PR that was concerning at first, taking shorts right here. And when price pulled back and reacted, leaving this candle away here, this is where I would be okay entering my position. So as price pulls back, you can enter live. Of course, you don't always need to just wait for candle close. To what I usually do in most cases, again, just wait for candle to close, and I would simply do this. Enter my position after the reaction, being completely okay with a bit worse entry, but actually knowing that sellers are stepping in right here. And from that point, I would be riding this position towards the main draw on liquidity. So I hope that was insightful. That's how I personally trade. Again, not saying that this is the best way. Every approach, every strategy is different. I'm just sharing what works for me and how I do things. So I hope you find some value in it, and we will talk very soon. Take care, guys. Have a great day.